Hey everybody, so I just wanted to make a quick intra-week technical video recap. Now, let's go ahead and first let's start out with the Fed Funds futures contracts. So right now I'm looking at ZQH23 minus ZQZ23, and essentially that's just looking at the spread between the March and the December Fed Funds futures contracts. And if you watched my last technical video, I was essentially saying, hey, you know what, the Fed Funds futures is calling Powell out on his rate pause decision, and they're essentially just calling BS on that. And just a couple of days ago, we were expecting 2 rate cuts, but you guys can clearly see that that changed quite a bit in just the course of essentially just 2 days. So now we're essentially only pricing in 1 rate cut, as you guys can see. So that is at negative 0.2425. So that is essentially close to 125 basis point rate cuts. So obviously, there's a lot of volatility here, and this could change very, very quickly. But what does essentially change this the most is going to be non-farm payrolls and CPI data. So that is what gives this chart right here the most fluctuations. Now let's go ahead. Let's move on. Let's look at QQQ. So if I'm looking at QQQ, there is just this massive gap that occurred today. So let me just go on a shorter time frame. I'm going to go on the 5-day, 5 minutes. So if we're just looking right here, we have this massive gap right there. And this goes all the way from 307.13 to around 310.84. So, obviously, if you're a bull right here, you got to be cautious because this could just completely fill right down there. If you're a bear, you're probably going to be very impatient and you want to get in this right away, but you could essentially get squeezed out. So if you're a bear, you want to get some time to essentially see this gap get filled. Now, generally, when you do see runaway gaps is when you tend to see the most trickery because, there's a lot of people who want this gap to get filled. Bulls want this gap to get filled because essentially, bulls, there's a lot of uncertainty and, essentially they won't feel any conviction to hold any calls when there's this massive downside gap down below. They might just literally just day trade and then close calls or whatever, or like sell shares or whatever at the end of the day. So right here, this is definitely a bearish scenario. Now, I personally think that any gap up is a bearish scenario in a bear market. So, honestly, I'm not too bullish with this massive gap up. Now, some people may argue that, and they may say, hey, you know what, gap ups are very, very bullish, especially if they don't get filled on the same day. But generally, when I do see gap ups like this, especially on a index product or a product that's essentially following the index, I do tend to see these get filled within a quarter. So definitely something to keep in mind. This could actually just get filled tomorrow if it wanted to, but we'll see about that. I personally have this opinion that, it's going to try and trick a lot of people, and maybe, it's going to look like it's going to fill, and maybe it just goes halfway, and then we rally back up. So who knows? I think there's going to be some trickery with this gap, especially because it didn't get filled the same day. Now, something else that I want to look at, we're going to look at SPY. Similar situation to SPY. Let me go on a shorter time frame, the 5-day, 5 minute. As you guys can see, we also have this massive gap right at around 395.61 to 399.50. Now, let me just show you what actually happened here. So this is a little bit more interesting. So as you guys can see, I have these trend lines right here. So let me zoom out a little bit further. Oh, maybe that was a little too far. Let's just zoom a little bit back in. So as you guys can see, we got back over this trend line, and then we actually got over this trend line as well, and then you can see we even back tested. So to me, this is an interesting situation. Now, another thing, let's just zoom out a little bit further. Let's go back onto the 1 year, 1 day, and let's just zoom in a little bit right here. So as you guys can see, we're back over both of these important trend lines, whereas before we knifed underneath these. So pay attention to where this 50-day moving average is. It's at 449. We closed at 401.35. So essentially, in 1 day, we managed to gap up. We got back over this support trend line, or this former support trend line. which was supposed to act as resistance. So now it's going to act as support. And then this resistance line, which could now be support in the future. So we got over both of these and the 50-day all in one go while producing a massive gap to the downside. So to me, this is just a little bit worrisome. We're climbing that wall of worry. So, honestly, I do think that this is bearish, as I said before. Now, let's just go over it. Let's look at the VIX. So if you guys remember my last video, I was essentially saying, hey, you know what? I think the VIX is going to see continuation. So I think it's going to continue to sell off. And that is exactly what happened. So my thesis for that was because I saw this massive shooting star candle. And when you see a shooting star on the VIX like this, you generally see continuation. So, we did end up seeing continuation. Now we're in this VIX demand zone. So this VIX demand zone is right around 1845 to around 20. And then look right here, we even created a gap on the VIX. So I'm going to go over to the 5-day, 5-minute time frame. Now you guys can clearly see that there's a gap right here. Do you see that? So gap right there. Now this gap zone is right around 1941 to around 1985. Now there's something else that I want to show you, and I'm going to zoom out a little bit further. We're going to go on the 10-year 1 day. So if I'm going on this 10-year 1 day, take a look at this trend line right here. So we have a bounce right there, a bounce right there, bounce right there, massive blow off rally on the VIX. That was the COVID crash. And then we have a bounce right there, a bounce right there, a bounce right there. So every single time we bounced off this trend line, we produced a pretty decent rally on the VIX. So if we were to fall all the way down here, that would be around the low 17s. So like 1730-ish. And depending on how long we consolidate, this could be a little bit higher because notice that this trend line is trending up. So if we were to hit this, later in the year, then, this could be like 1745. But bottom line, it's going to be near the low 17s. Now, let's go ahead. Let's look at VXN. So VXN is a similar situation. And if you don't remember, VXN is basically NASDAQ volatility. So if we're looking at this, we also have this gap right here. So as you guys can see, right there, that gap is sitting right there. And if we're just looking at what this gap is covering, it's right around 2393 to around 2449. So it's not a big gap. But, it definitely could get filled. And the same situation with the VIX. The gap on the VIX isn't that big either if we're comparing this to the actual gaps on SPY and QQQ. Now, one last thing. So if we're looking at this, the dollar index also has a gap. So if you guys can see, I am on the 5-minute, 5-day time frame. Gap right there. So this gap, this is right around, let's see, 102.75 to around 102.82. And this could actually just get filled in the after hours while the actual market is closed. So something to definitely pay attention to. Now let's just kind of zoom out on the dollar, see if there's anything going on here. So, honestly, like I said in my last video, as long as we are below this trend line, it's a little bit hard for me to be bullish on the dollar, but I do have to keep in mind that, we did see this low, we saw this higher low. So, maybe we could build out a higher high. So if we got back above this trend line and we built out a higher high than this, I would start seeing that the dollar could potentially be bullish, which is bearish for equities. It would definitely be bearish for mega cap stocks, which have a lot of foreign influence. So then, you might see those foreign currency exchanges come back into play. But as of now, those foreign currency exchanges, those unfavorable rates, that is actually acting as a tailwind for potential tech earnings here. Because as we saw, the dollar did fall quite a bit. Now, that basically concludes my technical analysis. And one last thing I do want to remind you guys, and I'm going to remind you guys quite a bit. Next week is going to be Good Friday. So the stock market is going to be closed next Friday. So what does that mean? That means that we are going to just have a 4-day week. And generally, what I tend to see with these 4-day weeks is that, usually in the beginning of the week, you tend to see a sell off with a kind of melt up near the end of the week. So obviously, that trend could change and maybe it just reverses. Maybe it just screws with people. And then we rally in the beginning of the week and then we sell off at the end of the week. So who knows? But generally, the trend that I've been seeing with these holiday based weekends is that sell off happens in the beginning of the week, rally happens later in the week. So don't take that too much to heart, but just keep that in the back of your mind. So hope you guys enjoyed this video and have a good one.